Welcome back to this channel. This is Unfiltered Forex with me, Clement. And in this video, we're going to talk about, or rather just revisit and look forward to on the COT index on gold. Yeah, by now I'm sure you have already gone over the basics. You know what the COT report is. You know what the COT index is. You know the difference between commercials and non-commercials. And now this is just an update of what to expect on gold in the coming few weeks in relation to the COT index. All right, so as you can see, something interesting is starting to happen here. The index is at 16.5, and yeah, it picked up. Essentially, it picked up. It was at 0 the previous week, and then last week, or rather last week part 1, it was at 3, and then now it's at 16. So what we're seeing here is like this index is starting to pick up. Usually, last time it was at 3, but it was not something worth highlighting because, yeah, this happens. As you can see, like here, it went at 3, then back to 0, at 3 again, back to 0, but now it's picked up and went higher up to 16. That's a rather significant increase. So essentially, what this means is that commercials are now starting to reduce their short positions. All right, they're now starting to reduce their short positions and probably adding onto the long positions. Okay, so we're not going to look at the COT report itself. Let's focus on the index on this video. Okay, so essentially what's that supposed to mean? Like I said, when the index is at this point, this is not a buy signal, this is not a sell signal. This is you're supposed to wait. All right, because time and again the index is more reliable in giving you buy signals than sell signals. Okay, so essentially what this means is, okay, even to understand what is likely to happen, you can just go back and see the one other time where, or rather the few other times where the index was coming up from 0 and starting to pick up. Right, this is one time in 2022, 2023, and early 2024. So let's start with year 2022 when the index is starting to pick up. Um, let's not say significantly, but usually you can see it picks up like in one continuous sweep. It's not like when it's above here. You can see when it's above 50, the oscillations can be very significant. But when it's coming up from 0, it usually just tends to go trending higher. Yeah. So comparing to where price action was at the time, you can see between March, yeah, between March to around June, this was a period of 3 months. Yeah, between March to June, as the index was picking up, price kept on falling. Okay, as the index picked up, price kept on falling. And then another time here when the index was at 0 is in 2023 May. Okay, yeah, this is May 2023. The index was at 0 and then it started to pick up and then was flat for some weeks there and then again back to almost 0. This was at 3 and then started to pick up again. So compared to where price was at the time, at the 0 level here, price started falling quite slowly. It, as you can see, even this fall was a rather slow one because there were no significant price swings during the week. It was rather low volatile, low to medium volatile. Medium, considering that this is gold, this is largely medium volatile for gold. So it just steadily fall. Again here, as the index started picking up, was flat for some time, but again went on to pick up. The fall here was equally just steady. And then again here, this is in 2023, coming into January 24, it started picking up. And then the index, what did it do? Or rather, what did price do here? It it was just mostly flat on this. In this case, it was going lower. Yeah, price was making lower lows and lower highs, but at some point it just went flat. Even the price deviations here weren't all that significant, but you can see from an intraday perspective, these movements are considered quite volatile. Okay, yeah. So the point is, the fact that this index is now starting to come up from the zero level where it was for quite a while, you might see price do one of two things. All right, it's either it's going to go flat, sideways, or start falling. All right, and even if it starts falling, remember the downturn, or rather the fall, isn't usually significant when the index is coming up from a zero. All right, the what do you call it? The volatility might increase, like in the coming few weeks, if the index shows you that it's picking up quite quickly. And that's the whole point why I have decided to make a whole video about this thing. This deviation alone is not enough to tell you a lot of things, but it's enough to tell you that this could be the start of something. Okay, because now it's finally coming up from the below 10 levels, starting to pick up, meaning here we can expect either a fall or a flat movement on gold. Okay, now let me look at the trading view chart. Here is the chart on trading view. So now after you have seen that from the index and is showing you price can only do one of two things from here, either go flat or go lower. Now you start applying your technicals or whatever prediction tool you use here, or analysis tools you use here, to start seeing what to start rather looking what's likely to happen, or what is price showing you. First of all, you can see this is from April. Price has been kind of refreshing these highs. It refreshed here. This was in April, and then again in May, and then again in July. The all-time high was refreshed. But on August, yeah, in August, the all-time high has not yet been refreshed. And in fact, you can call this a rejection, all right? Because it could have gone higher and refreshed the all-time high, create a new high around 2500, but it didn't, all right? And this is spot gold. If you look at futures gold futures, yeah, there was an all-time high there, but here, in fact, let me just open it in a separate chart. Yeah, as you can see, gold futures, yeah, look here at the top, let me see, top left, yeah, gold futures. This is where you see gold futures. This is gold futures. Gold futures did refresh the all-time high that was made in July, all right, above 2500. Okay, so coming back now, here this is gold spot, right? There's a difference. Yeah, this is the spot price, and that other one is the futures price. So yeah, here we are. Essentially what's happening here is that now you can see there was a rejection. All right, here price wasn't able to refresh the high, which could mean that the bullish momentum is mostly not as strong as it was here, not as strong as it was here, and definitely not as strong as it was here. You can see this upswing was a very volatile one, and it didn't even last long. It just came up like from March up to April, mid-April. This is around 2 weeks, 3 weeks, 4 weeks there of just straight upwards price action. Came here, retraced, came here, retraced, refreshed this high, retraced a bit, and then there was a rejection here. So what you are supposed to be seeing here is that just as the same way that these highs seem to be refreshed, there was also somewhere along the way where price kept coming back to. You can see these big red candles that are forming, that are on the chart. They stand out, right? As this one, for example, this is 2%, a 2% decline. This is 2% decline, 1.7. This is another 2%, another 2%, 3%. What is this? No, this one, no. Yep, 2%. One. No, this is two. Yeah, this is two. Yeah, this one is 3, 2, 2, 2%. Let me check this last one. Yeah, this is the other one. No, 2. So you can see as price made a new all-time high, there were these sudden bouts of volatility, and the price happened to retrace to a common zone whenever whenever these bouts of volatility came. All right. So from here, price came down and fell to here. There was first a zone here where price seemed to pause for a bit because there was a rejection there, and then fell to here. And then after making this high, price fell again to here, and then fell again to here. All right. So now that there was this high, there was this big drop, 2%. Price now dropped to here, and probably we might see it go another, and this is a higher low, right? This is a low, this is a higher low, and probably we might see another higher low here. Now this higher low is coming from here, is coming from here. Okay, same with this, how can I call it? All right, now this is where the ICT guys, they take something simple like this and make it so complicated. You start hearing words like turtle soup. You start hearing, I don't know, fair value gap. You start hearing, liquidity. This just kind of sticks. These are just levels of price. You don't need to have fancy words. As you can clearly see, price is retracing, making one stop and then making a lower one. Retracing from a high, making one stop and then making a lower one. Retracing from a high, making one stop and then it's likely to make a lower one. I'm not saying this is 100% sure guarantee that it's going to happen. What I'm saying here is do not be surprised in case it comes. And remember, there is that confluence between what the chart is showing you and what you will see there on the index, because remember, as soon as the index starts crossing above 50, that's when it becomes a really good buy signal, right? So you're going to wait for the index to start crossing above 50 and then compare that at that time to where price will be at this point, and then yeah, you can decide for yourself if it's going to be a great buy signal for you at the time. Okay, so that's it. But from an intraday perspective, oh my goodness, it's a really wait and see approach. Okay, you can't speculate too much on this one because as you can see, on some days the price volatility is just so extreme, and the only way you can tell if something big is coming, like I have showed you, price is likely to refresh this low and create a lower one here. It's yeah, you can know something like that, or rather you can see that something like that is coming, but trying to now um pick, like say it's going to happen on a Thursday, it's going to happen on a Wednesday, it's going to happen on a Friday, that part now becomes very hard and not worth your time. And even going further to try and catch a big move like that, which you can clearly see it's very likely to happen, it's you might get liquidated before price goes in your direction. Okay, let me see. So this was on a this was on a Monday. This big 2% drop. This was on a Monday. This was on a Tuesday, uh, Wednesday, Thursday. This one on a Friday. So you can see all days of the week. It can happen anytime. Okay, because this one was on a Friday and then this one on a Thursday. So there is no like specific day of the week where there will be a significant bout of volatility that's scheduled to come. No, there is no schedule like that. Okay, you just wait and see, and then when it comes, make sure you're ready. Right, your job here essentially is to stay alert, so that when the market presents you the opportunity you have been waiting for, now that's when you make your move. But in the meantime, don't try to force the market to do what you think it's going to do. No, don't force it. And forcing it in this case would be like now trying to place sell orders here because you have seen, or rather you're seeing price is likely to fall to this zone. It may happen, it may not happen. All right. In the event that it may not happen, you of course will lose a lot of money, which would have been an unnecessary loss, because you can just wait to see what's going to happen and then get in only and only when you can see it's the right time, the confluences are adding up, even the macroeconomic environment is adding up, and then at that time that's when you can get in. Okay, so that's it for this video. I don't think I have anything else to add. Otherwise, have a lovely week, and yeah, have a lovely week.